All right, good evening, guys. Ken of Tortoise Capital Nightly Strategy Podcast for October 9th, 2023. I think we may actually get that book published this week. We made the final sets of edits and now just doing some admin work with the Amazon account. But I think we're going to have it on sale this week, so that's pretty exciting. That's been a long project. This is a screenshot of some work we did Sunday with the Foundations Q&A, and it rolled over in the Creativity 202 Q&A, and it had to do with the importance of identifying your manageable risk box and the different ways that we go about doing it, including concepts like the risk box size, standard risk, and then some of the features of our RLCO framework and statistics in order to come up with different sized possible boxes that you can then learn if you can manage or not. And then we worked through the sequence of decisions you make to enter, to move to no lose, post enter for two, what to do when you get to an average win, what you do when you get to 2R in hand, how you should think about the exit, and then the different ways that you can manage those decisions in a rule-based way so that you're not spending cognitive energy trying to think your way through it each and every time you make a decision. That should all be rule-based. And we work through a bunch of different ways in which we might take opportunity exits or conditional exits, trailing stop exits, management exits for money management or position sizing. And then just as a matter of sizing, we work through some examples of what the different sized risk boxes are based on the statistics of the average range and the range stat, the frog box, the R10. So the range stat proportionally might look like this. And when that's the case, you divide that by 10. Your R10 box is really only 1/10 of that. Your R6 is 1/6 of that. Your frog box is typically 3 times the size of your R10. And if this is your average range in orange, and this is a frog box, then a range stat is the average range plus a frog box. And so that's how you start shaping out the dimensions of a normal day at work. And then that allows us, once we've picked a minimum manageable risk box, to frame a trade to determine if it meets our criteria for being able to take it. And then we have a handful of strategies for managing those exits throughout the life cycle of the trade. So it was a really good hour and a half at work on Sunday, and it rolled over into the creativity course because most of these ideas come out of work in progress that we were doing in the Creativity 202 course. Just kicking around different ideas in a very rich narrative soup, like a true story circle, allows you, like popcorn popping, to really come across a bunch of different ideas, some of which are really applicable immediately, some of which we just got to put on a shelf and develop further. But most of these ideas come out of the dialogue among traders in the Creativity 202 course. And the thing that we don't know is what's going to be the one that grabs us or what's going to jump out each week in the office hours as we go through it. And that's really what makes it kind of exciting. And that's why it's actually my favorite course to teach, because it really gets you out of your normal box and allows you to really engage with the creative elements. I'm going to be featured on a podcast with Curious Lion, who's an executive education guru, and he's going to be taking a look at the effect of storytelling, story science, and creativity on our work as traders and the work I do with kids for soccer and for educators. So exciting stuff. If you are a Foundations or Creativity course student, you should absolutely go listen to the recording of those office hours from Sunday. It is filled with goodness. If you're not a Foundations or Creativity student, you ought to think about locking in the price now this month before it goes up permanently on 1 November. That's all I'm going to say on that. All right, let's jump into the hybrid swing portfolio on 30-minute charts. Looking at, as usual, starting with Alcoa on 30-minute charts. Now, one of the features of today that you're going to see is going to be very consistent. So this blue line is the opening today. So that lines up with the yellow box, which is today's price. And what we had Friday across the board was a strong upward day in the S&P that generally opened low, PSAR flipped, closed high, and we ended up holding about our maximum number of over the weekend trades. And then this is where war happens. And this was the effect of 48 hours of a negative news cycle, caused a lot of those to come down and erase a lot of those gains. Now, the important thing to notice is that the buffer that we had on Friday from the gains, generally speaking, protects us against getting actual absolute losses where we turned a winning position into a losing position. I think it happened a couple times. But in most cases, the positions that we're holding had enough of a buffer that when you get that gap down, you're giving back open profits and not core capital, and that actually makes a difference over the long run. And then what today featured was, after that initial sell-off, there was generally in the afternoon, about halfway through the day, a bunch of buying pressure that came in when it looked like the world's not going to end. And that's going to set up a lot of kata twos. And we're going to be taking positions and holding them overnight once more when we have money in hand. With that in mind, you'll see that theme reflected throughout most all of these trades. So scratched the overnight in Alcoa, caught a 2 entry. This is one where I wanted to make bank. And if it was not an outrageously raging upward move, but looked like it was selling off, in most cases today, I took the opportunity to cash and make bank, in this case about a half an hour, but I didn't want to have the overnight risk because we are still in bearish volatile. We're very close to sideways. We got a world at war, and it's not going to get better anytime soon. So half an hour in Alcoa. AI, this is one where Friday we took the exit for one. It gapped all the way down to here, so that's an advantage of taking that bird in the hand in a volatile market. I took the opportunity to get short because the dragon had rolled over. It rolled back. I gave back, I think, too much, but I really was hoping to see this thing fail bigly. And I just took the dragon exit right here for basically a scratch. Followed through with a RLXD regression line crossing the dragon, front running that PSAR flip a little bit, but took a standard risk, and it closed pretty well, and that's holding about 1.5R, and it was testing this peak here, so I'm looking for this to resume tomorrow. If it doesn't, I'm going to try to preserve as much of that as I can, and you're going to see that as a common theme for managing exits today. Amazon, so this is one where this is a complex trade where we had Thursday an entry that gapped down against us, so we lost 1R. It reversed intraday, so we got the revenge trade, and this one had me feeling really good, and then today it gapped all the way to here, and so this is a losing trade, this is a winning trade. Those two basically cancel each other out, and that was a 4R in hand, and it basically scratched. So that was the price of war over the weekend. which is about as bad an event as you might want to see. It then monkeyed around in the morning. It reversed. That's essentially a dragon entry, a 1-2-3 entry on a position I wanted to hold, especially after that strong move on Thursday and Friday. And this closed very well, and this is holding about 2R. Caterpillar, we did not hold that one over the weekend, so we missed the losses of the gap down, and I just took the re-entry on an orderly Kata 2 when it crossed the dragon, and that's holding about 2R, and it closed very well at the top of the daily range. And so this one actually, Caterpillar is kind of my canary in the coal mine for the broader market that's not sexy tech or biotech or financials or energy. It's just a good industrial grade American company. And when this is closing well, then I think of that as Main Street in the large caps. And that's holding about 2R, and I'll be ready to add to that position on strength tomorrow. Cliff, no trade. CVS, I missed the morning fireworks on this one. It opened here, ran all the way up, ran all the way down, and came back. That actually felt like a form of Kata 2 when it held support at the edge of the dragon. This is about when all of the buying hit in the market. So I just took that with standard risk, and it closed really well for 2R. And I like that one for tomorrow because it has cleared all of this resistance. CVS is a keeper for tomorrow. Dish, I took a half an R on a PSAR flip. It just wasn't much follow through. Devon Energy was a big gap up. Now this is the least surprising gap of all because you got threat of global war in the Middle East. And so there's your gap up. That was a hold my nose and buy it. Closed really well. This is holding 3R. And it's only halfway up the stack. And looking for it to get up around 49. That's one that could really work tomorrow. So keep an eye on USO and the energy sector, and then Devon Energy for more follow through. Electronic Arts, massive. Can't explain why. Friday's continuation, because we did want to hold it overnight here. We like that. We like that. Didn't want to hold it overnight. So this was Friday's move that finished here. There was barely a nudge on that one with one position. And when it gave us this continuation, new high of the day, second position closed very well. My stop is going to be right here at 124. So the second position is in the money. If this breaks above the statistical high around 124.6, then I would look at adding a third position tomorrow and then managing that one carefully. This one is deep in the money. This is 2, 3, 4, 5, 6, 7, 8, 9 on this one. 1, 2, 3. 3 on that one. So that's a 12-hour trade on two positions and no limits in sight. I'm liking that one. Let's see. Emerging markets. So this is one, again, where it's already a gappy symbol. But take a look at the money we gave back by holding that one overnight. Oh, my gosh. So this one was 6R, and this one was 4R. That was a 10R position on Friday at the close, and it gapped all the way down to here, and we got out of that one, and we're only able to, we lost 1 on this one, and we gained 2 on that one. So this whole trade ended up netting +1. That was a -9R event because of the war. So there you are. So that stabilized, though. And when this broke through the dragon, I bought it, and I got the fill here. and it closed right here. This is one that I don't feel good about holding overnight. I think in retrospect I should exit there, just because how this thing is already gappy. But on the other hand, there was a lot of buying pressure on this before, and my thought was, let's investigate the gap to the upside. And even though we gave back 9 on this, and we still made a little. So we'll give that one. We'll see how that shakes out. Ethereum, the adverse gap, that was a surprise, but we ended up netting 1, gave back 2. Mexico, we also gave back to here, and this ended up losing 0.5. Then the kind of the revenge trade on the RLXD, and that's holding +1. So this stabilized fairly well. Looking to see some more gains tomorrow. That's one I also don't think I should have held in retrospect. Brazil, it had closed here. It only gapped to here, but I was in the mood to sell. So we sold and cashed 1, and bought the PSAR flip. It ran up and closed pretty well, so that's holding 2. I'm liking that. So that net of those 2 days is +3, and that's stronger than Mexico. So that'll be the first one of those 2 that I look to add to tomorrow on strength. Intel. This was just part of the tech recovery, and the adverse gap took it from here to making it lose -0.3. It sold off, got long, and it's holding about 0.5. So that one is really, it's almost looking like dead money. There's a lot of volatility, but not a lot of net movement. IP, on the other hand, this gapped. Now, we didn't have any position on that at all, so this was really zero state. Saw the gap all the way down to here, came back and hit the PSAR flip, hold my nose, hold my beer. 1, 2, 3R, and it looks pretty good. International paper. International paper and real estate. What are you doing in my portfolio? I'm making money. That's what they're doing. So this was the last week's trade that terminated a morning hook, a re-entry, and that closed well. There was almost no sell-off on this thing, and it stayed in the money. And then I added a second position on the COTA 2, and it closed really well. U.S. real estate, holding 1, 2, 3, 4 on this one, and 2 on that one. That's a 6R trade on 2 positions in 2 days. And as an alternative to equities, as a store of value, that might be a flight to safety kind of move, in the same way that while we're here, I'm going to jump down to treasuries, because this is also one that feels like a flight to quality because of the global situation. And we're going to see on the trade of the day that this move here and this move and the move in the last 30 minutes, each one of those was accompanied with enormous volume. It really moved the VWAP around quite a bit. So that feels like a real strong vote for folks rolling out of equities and into treasuries. It also aligns with a time when the yield on treasuries is better than ever, and so you can actually, earn some income on the payout of treasuries, and so you're getting them at a low price with a high yield relative to the last 5 years. So maybe that's what this is. We'll see. So back to the regular schedule. KRE, we just covered it. We're happy to get out of that trade on the regional banks flat. I missed the afternoon move. There were better ones to hold. Mattel, Hardly sold off. I re-entered with a COTA 2. It closed at plus 1R and just cruising along. McDonald's, I took the opportunity to buy it here. This is where in the S&P there was a bunch of buying pressure, and it looked like it had held pretty well, and I was hoping for more, but it is holding plus 1, and it's still wildly on sale, and I think it benefits from upward moves in the market the rest of this week if there's any strength, as things calm down a little bit. Merck, this was a favorable gap, and I don't know why it gapped up, but it ran all the way up to here instead of selling off. And then as it started to fail, I just decided to cash and missed all these shenanigans. And it was too volatile intraday for me to mess with it. I'd rather stay with the indexes on a day like today. So we cashed 3R on that one. We're happy to do so. Microsoft, this one scared the living crap out of me because I had, as you recall, I was feeling very froggy on Friday, and we ended up holding 4 positions, and it had closed here. It gapped down into here, and then started a strong reversal. When it stalled here, I just decided to liquidate the whole position, and then when it kept going back up, I put 2 positions back on. So I had 4. I've now basically got 2 positions. That's a 2 in there. I've got 2 back on, and I think this is one that benefits from if there's any kind of calm in the market, and it's also a flight to quality. And so that's holding plus 1, but on a double scoop position. So it's really 2R in terms of real money. I was worried about that one. And fortunate worked in our favor. No trade in marijuana. This move in the last half an hour, we'll see if there's follow through. Don't know. Didn't want to chase. Nvidia, we ended up scratching that trade. I mean, that one gave back a full R. It was, it had closed up here, sold off all the way down here, so it scratched instead of plus 1. And then, but the dip was not large. When it crossed back above the VWAP and touched the dragon, I bought it with a standard risk, and it closed pretty well. So it's holding plus 1. We'll see if it benefits from tech resurgence tomorrow. Just exited the clean energy trade. I think the money is to be made in conventional energy and not in the speculative cleans. So I think this was just the end of a speculative trade, and was just happy to get out with half an R. I didn't want to chase. We'll see if there's any room for growth tomorrow, or if the weakness makes it fail. I'd more expect that, actually. Rivian, scratched the trade from Friday, scratched the trade from this afternoon. There was no follow through. And again, here's the S&P. We saw that already. It had closed up here, sold off hard down here this morning, morning hook, and it closed really well all the way back here, which is above the peak and the peak. So that actually is a surprisingly strong move on heavy index buying, and this was stronger than everything except about 2 different symbols in our stack, because when you sort this by reward to risk ratio, you'll notice that the S&P is way down here, and it's only points. No, where is it? It closed at a 10-day high, and so the reward to risk ratio on a retest of the 10-day high is 0. So whereas some other things really were punished with a harsh sell-off, the S&P featured really strong buying pressure. So if you want to quickly find the things that were very strong from this kind of market shock, you just come down here and say, take a look at all the ones that have zeros for the reward to risk ratio, and these are ones you want to hold, and these are ones you want to look at going forward as current leaders. Microsoft, the S&P, Cliff, emerging arts, or electronic arts, excuse me, CVS, and U.S. Steel. And Tesla isn't bad either. So to me, Tesla and Microsoft represent kind of the growth, value, safety, three-headed monster. Treasuries, that got two positions into them. I entered this one as soon as basically it cleared the previous RL10. I feel like that's a flight to quality and chasing yield, and this feels, after a historic sell-off all the way down to 84, this just feels like a great value play, maybe the best one going. Tesla, I scratched the over the weekend trade. It had a slight sell-off to the same level that it held support last time. I bought the 1, 2, 3 entry. It closed here, so we're holding about +1. I like that position. U.S. Steel, no trade. It's been really volatile on the 30-minute bars, and I just I don't trust it right now. I've added a new indicator on this one. I want you to know these simple moving average 30 is this one. And I like comparing, that's like the middle of the river. And you want to compare that to the 30-period regression line, which is the fast-moving 30-period moving average. So when you see this, what you're looking for, the regression line crossing the moving average as an indicator. So this, anytime the RL30 is above, then you basically have a strong upward move. When it crosses to the downside, this is where you have danger. That's a danger signal that it could be doing this. But then when it crosses back up, you have a vote to the upside. So this is all your shorter term excess gains. And right now the RL30 is here, the SMA 30 is there. So you have a little bit of a buffer of goodwill. The afternoon buying actually preserves that a little bit. So if we can get the RL10 to move back up, then we still actually have some positive feelings on the basis of the relative strength of the 30-period regression line compared to the simple moving average 30, which is the middle of the river. Okay, so that's a warning sign. This, when it crosses back above, that's a positive sign. So just a little piece of advice there. Let me know if you found that helpful. All right, so this is Treasuries and the sniper trade of the day. I've been stalking it because of the historic sell-off in Treasuries. And this was the OR3. Big gap up here. It sold off, so we got short. Exited for +1. This was the risk box, was about half of that. When it crossed the VWAP, I bought it. It was above the previous little peak, so that felt like a emerging dragon. And then finally woke up after 3R in hand, and it did not fail back to the VWAP. And so put the second position on, took the orderly exit here. So the first position had 1, 2, 3, 3.5. The second position had about a half. So that one represents about 4R. This one represents about 1R. We get a very orderly CATA 2. When it clears the previous peak, put the second position on. I take the orderly PSAR exit right here. And the first one returns 1, 2, 3. And the second one returns 1. So maybe some slippage, maybe another 3. The CATA 2 continuation. This is one that I'm holding. It's +1 in hand. And so this whole package was about 9R intraday through here, and I'm going to use one of those to fund the overnight risk. I just think that there's a lot more coming. That's one that I'm also trading in the futures, because I think we're going to look back and see that was the mother of all buying opportunities and treasuries until the end of the year. We'll shift to the traders. Tim got chopped around a little bit in AMD and in Devon. He was on the right side of the angels here. He shifted to Merck and MGM instead of stopping and reversing. You say, oh, he should have done this. But his span of control was such that he traded, instead of taking this, which was potentially 2R, he shifted to Merck and MGM. And there's Merck for 5R and MGM for another 5R. So he gave up the 2R in Devon and got 10R out of Merck and MGM. So pretty good decision and illustrating span of control and a 10R day for the young fella. That's good shooting. Tim and his accountability partner, Woj, you guys will remember him from a few months ago. They have put together a package of tortoise indicators for TradingView that I'm getting ready to review that looks like a pretty nice administrative support tool, so we're excited about that. Also very interested to say that Chris White, who is the CEO of a company called EdgeRater, which is a spreadsheet-based solution for finding, filtering, backtesting, managing trades. I'm partnering with him to take my personal spreadsheets to clean it up and put industrial strength formatting and price engagement with his templates. He's coming out with a new release of EdgeRater, and Phil and Griff have been working with him for about the last 5 months to proof all of the formulas and all the templates. And that looks like another solution for folks that maybe don't want to use Thinkorswim or TC2000, but you want to do your own filtering and then add some pretty good back testing in there along with the other templates that he has. We're going to put together some kind of package for folks that are interested in the EdgeRater. Excited to say that's getting pretty close to release as well. So this is going to be a pretty good last couple months of this year. A lot of good things happening. Let's see. So +1 to Tim there for a 10R day. My brothers sent along this little note. This is the pound dollar on a, I think this is a daily. Yep. So looking at a this move right here is 113. When this comes down to here.
Yep, let's just zoom in on that. So
yeah, we got a
if you
compound
put a
critical
line,
state.
it's right in the
Let me
middle.
put my ears on. I hear you mumbling in the background. Go ahead, say it.
I was just looking at it, and there every time it has gone in those circles,
Yeah.
I highlighted the last circle, and then if you put a line on the top and the bottom in that last, and the one below it, the big one.
Yeah. Yeah. So this is.
If you just put a line up and down on the high and the low in the last couple days,
Yeah.
when it breaks out of that, I don't know which way it's going to go, but it's
yeah, this is a nice zero state, and we're going to get a nice move out of that.
Yep. Just every time it has gone at that in those blue areas, it has jumped either up or down. So
yep. Compound critical state. And it's coming from a long period of oversold, and so it's just start. This move here is associated with that move, and so this would lead you to believe that you're likely to see that kind of a move.
Right.
You know,
Well, if you look
maybe.
over to the left, this is using my 3-9
Yep.
filter. So it's daily spring, 3-day spring. So that the acute move is there, but it's coming off that long on sale since mid-July.
Yeah,
So
this means this really is saying that it's in daily spring and 3-day spring. So that means in both of those time frames, you're getting you're getting that kind of after a harsh sell-off in the winter, you're getting that turning point in the
yep,
spring on
yep,
both the daily and the 3-day. So it's still early days because the 9-day hasn't
correct.
the 9-day has not yet turned.
Yep.
So you know that you are only, as you can see, 3 or 4 days into that turning point. But this is a reliable way to find that, which would
Hmm.
also lead you to go look at Disney, who
Oh,
has already made some choices, made
it's
some turns
almost
there
as if
too.
I
Yep,
I was trading that
yep,
yesterday, and
yep,
you might see it in a few
yeah.
minutes.
Oh, here's the next chart.
Oh, yeah.
So there's Disney.
Well, you
Now,
got mad at me last time that I didn't tell you about something like Mattel,
yep,
so I'm telling you.
yep, yeah.
But I
So
found it. More
so the
importantly,
thing
I
is,
wanted to show you that I found it through this.
yeah, it's
through-
using the filters of the daily and the 3-day to find the early turns after harsh winters that turn into the spring. You
Yep.
see the daily, then the 3-day, and then finally the 9-day. So you can stock it here, you can enter it here, and then you can start adding second and third positions when the 9-day follows through, if it does. Because it
Yes.
takes another 6 days of
Yep.
goodness for the 9-day to turn, and that's a confirmation that you actually saw what looks like a turning point. So this is what that 3-day kind of
Yep.
early, the front run
Yep.
kind of a trade gets you. And
Yep.
then this is the residual that this earned money to fund the larger swing trade.
Yep. And then the next slide is you'll see. Yeah.
Yeah, and
So that's
this
after
is
the
now the
long winter.
yeah. So this is the 30-minute chart now on Disney, and now you can see, yeah, the long slide, and now here's the turning point.
Maybe.
Well, you have a daily turn and a 3-day turn, and that's what it looks like every time it does turn.
Yep.
Not saying that it will continue, but you have an uninterrupted flow of about I don't know, probably 30 bars.
Yep. That's a 33-day bar. So
That's a yeah. So that's like an entire quarter of selling. I should say that's a 3-day chart. No,
if
I'm
you
sorry.
zoom out on that, we are at a historic low for Disney as well.
Yep. Yep.
So these are value buyers, and
Yeah. Let's see.
I don't think you have Disney, but
Might need to add it.
maybe. Let's see what happens.
Can't. Yeah,
Yeah.
that'll get your attention.
Yeah.
Yeah.
So yeah,
Yeah. Where the heck was I? That's a
like
10%
I
move
said, you
off
got
the.
mad at me last time
Yeah.
I didn't tell you something like
You're
this, and
supposed to tell me at the turn down here, buddy.
I know, I know.
That's why I'm getting mad at you. All
Okay.
right, back to our scheduled program here.
Good night, everybody.
Let's see. Looking at George's stuff here. Now, George, we talked about this last week for your stop and reverse. You got to be able to detect that the entire market is making this move. Like every single symbol in our stack is making this move. The entire market was doing that. So this should be a stop and reverse somewhere in here. And again, it's the same move. You got to be able to pick up the market and sector intraday shifts because everything we're trading is connected strongly to those kinds of larger currents. I want you to think of the S&P as what's that? The Gulf Stream. You know, if you take a look at, you know, global weather patterns, essentially, you know, from Florida here, you got this engine of heat energy, and it forms the Gulf Stream, and the power. That's like a giant hot river running through the ocean over towards England. You know, and that thing influences everything around it. And when they hit the buy signal on SPY, and they say they're not going to let the Israeli Hamas war end the world, and those guys hit the buy signal hard to eliminate all doubt about is this going to fail and all that? No. That affects all of those big broad sectors, and everything in the market basically jumped up. That's affiliated with large caps. So we got to be able to see that kind of a move, and that's why the S&P should always be on your screen, so you can detect those kinds of moves. Like if we go look at S&P intraday, even on 10-minute chart, in the yellow over here. This was that early morning selling, and then they hit the buy signal right there. One leg up, pause, two legs up, pause, and then there was a third leg actually in here. That's what institutional governmental buying looks like. And that drives everything else on this stack up and to the right. So we've got to then see if the market's doing that, what sector's doing well, and which symbol in that sector is doing well. So we got to be able to pick those up. Let's see. Yeah, and so we stayed short on this one way too long. Look, this is supposed to fail right away. When it doesn't, when you see that little doji and this thing, and the whole market started going there, we should be out right there, and we should be long right there, and then we should be scratching right here on the lack of follow through. We should not be losing that much. So don't just stick around just because you drew that, say I'm willing to lose that much. That doesn't mean I want to lose that much. You also got to read the signs. This is supposed to fail. Look, it had 3 bars down. This thing is supposed to fail and supposed to get back to here. And when it doesn't, and it comes out of the dragon on that one, especially when the whole market is running up, and Alcoa is strongly connected to XLB materials, which is strongly connected to SPY. When they hit the buy signal on the S&P, that's going to overwhelm this thing, and it gets better. So we got to get out of those short positions earlier on that kind of market move. This is Mark B, and I'm going to let you download his symbols or download his chart. And he did some work in here, and every one of these looks good. Every single one of these looks correct. This is the British pound, US dollar on the 3 minutes. Hey, that's the same one my brother just alerted you guys to. And he did 14 trades in 13 hours and brings home 4R. And that's only trading one position. And on the big fat moves, he's massive on those. And the ones that are not in his favor, he doesn't stick around. But when he lets it run in his direction, and he sees those turning points, notice those turning points at the VWAP. When that holds and it starts going, pow, great move. And when it crosses the VWAP, off it goes. When this one briefly flirted above the VWAP and then broke the other way, PSAR flip, that should be Hulk smash, both of those. We got pretty good moves, but we missed this one, and we were late getting in on that one. And then on this one, we should be hitting that Kata 2 here instead of the Z3 breakout. And this one here, instead of the Z3 breakout, we should be hitting the PSAR flip and the collapsing dragon right there. And this could have been 8R. And when this one breaks, you might think of a second position here. New high of the day. So great entry, second position, perfect exit.
And when he crosses the VWAP right in the middle there, right after
Yeah,
trade 8.
I showed that one.
Yeah.
I mean, this is a good one. We could actually have gotten the Kata 2 here instead of the Z3. If you get the Kata 2 here, then that's a 2R battle drill anyway.
Yep. Yep.
So, there was probably a 10R day in there waiting for us. Brian, on the Kiwi dollar, on the fives, gets a couple snacks. 0.4, make bank, ring the bell, and that makes his, that's his expectancy. So he's just crunching these things out nicely. Yes, you should be front running the second entry and entering here, because it was a double bottom, and it did not fail, and you already had one strong move up, pause, and then another one up. It's going. All right, we'll shift to the reports. Oh, this was a point I wanted to make on the sniper trade of the day for treasuries. Here's the VWAP. There's a couple spots on this where the VWAP is just kind of cruising along, and then it makes a jump right here. That means there had to be huge volume coming in to make it move. Not only the price going up, but with lots of volume too. And then it made a jump in the last 30 minutes. That move was on massive volume. So that run in treasuries is not done. This thing held support and is getting ready to go again. But notice how orderly the PSARs are on that little rascal. The 150-day look back. The turn is a little more pronounced. Here's today's range. This is a pretty strong move off the bottom. Lots of buying pressure in here today. Next target here. So it could make that move tomorrow with an acceleration. But this could also just collapse if we get bad. All it takes is some bad news. So this is a trader's delight right now. So, nice move on the daily. Here was Friday's big move. And then today's move was really, with that as the low of the day, they hit the buying pressure and off it went. And it closed higher than yesterday or Friday. So that's good news. Yeah. Let's see. Yeah, you can see the where they hit the buy signal. Right in here. Caught a 2 all day. And this has cleared the previous resistance. And if it gets above this, 440's in range. Take that price and add a range stat to it to get an estimate of what tomorrow could look like. What's the range stat in the S&P? Where could I find that? Oh. Range stat. $6. So the S&P could go up $6 tomorrow on 400. So that's about a 1.5%. Would be a nice strong move, a nice strong directional move. Tomorrow could even be a 2% move in either direction. We're in bullish volatile and the world's at war, and today was a surprise recovery intraday. Tomorrow could be a 2% net move easily in either direction. Tomorrow is prime time trading. So, sorry. Come on, Ken. Bullish volatile, strong recovery today. Volatility is just starting to become favorable. Overbought. Strength in Microsoft, Disney, and the diamonds. In the indexes, it's the S&P. The S&P 100. Oil weak. Yep, that's what it's saying there. Disney was strong today at 124. Wow. Microsoft, Apple. Those are all your no-brainer value large caps, right? What had the juice today? The NASDAQ and the S&P. U.S. large caps and U.S. tech. That's where all the money is flowing to be safe. Buyer's market. And that's everything we really need to see for tomorrow. Look how widespread the strength was today.
Don't forget about McDonald's, bro. 82. That's the next value, I think.
Yeah, I mean, we got that mapped out pretty well. All right, that's everything we got for today. We'll get this posted and be ready for them tomorrow. Take good care.